Welcome back to another episode of my trading vlog. I'm going to get going here really quickly on AMC and GameStop, and then I'm going to talk about the dollar and silver and gold equities, because that's really where I'm trying to focus my attention right now. Let's see AMC on the hourly time frame. We had a good bounce, you can see, off of this hypothetical trend line. This is a hypothetical trend line because we don't have a new high to confirm it yet, but you can see the price did bounce there. We passed above 456, looking to climb above 628 to be bullish. Still not there. We haven't even recovered this uptrend, which was lost. You can see the price kind of came into contact there and is now struggling to move ahead. This is a very awkward position that AMC is in. You can see that I was kind of expecting this correction to end much sooner. It pushed much lower. We'll see if we get a wave C or not. God, it's so awkward. Watch. So this is wave A, right? And if wave A is going to equal the height of wave C, then wave C is at like 768, like best case scenario. But I just wouldn't be putting too much faith in that. It's just weird. AMC is moving in weird ways, like it always tends to do. And this is even looking now motive to me, less corrective. So I'm gonna have to go back to the drawing board here. It's just really hard to tell what AMC is doing, especially when it has this other equity floating around, APE, which has, corrected itself up to B and is now finding more downward motion towards C, I think, and that's going to be somewhere probably, it's probably a negative price target. So I'm thinking testing the new low, or it's going to just equal AMC, whatever it is, but AMC would have to drop quite a ways to get there, right? So the meme stocks they're both behaving weirdly at this point. GameStop is just grinding sideways between $22 and $24. If we get an upward breakout, I would still target 32.56, but it's just not happening. The indicators are going to be affected by that sideways grind. Implied volatility is going to drop as the price becomes inherently less volatile. The MACD is also going to be making smaller and smaller moves as the closing prices continue to get closer together. Volume is also dropping precipitously at this point. That's fine. That just means that after a big move, we have some consolidation, some buyers come in, and then some sellers taking profits. And then guess what? Well, there's not really much of either now. It's just grinding sideways. The RSI isn't giving us any hint of anything at pretty much exactly 50. So meme stocks are just doing their thing. They're memeing. Let's go look at Tesla really quickly. Let's see here. I was looking for a bounce, and I've got the bounce. I said this bounce looks feeble. I'm expecting a reversal, and we're getting that reversal now. This is starting to look kind of toppy. I think if I open up my Kappa Vision chart, we'll get something, let's see here, a little cleaner I can work with, because now it looks like we have some other triangle forming through here. And maybe I raise this up so it makes more sense. We could be grinding sideways for a while. Even here, it's pretty easy to say this is probably wave A. We're moving through a triangle for wave B. And when we get an upward breakout, if we get an upward breakout, we'll be looking for like 280, but that's only if. Otherwise, we could be topping, and the spill downward is awaiting us. But we have been looking pretty bullish lately on SPY, which I think is dumb. I really do. I don't think the markets should be moving as high as they are. But you know what they say, the markets can say irrational longer than you can say solvent. I was expecting to see us move through a broadening pattern through here. And we've actually we did come down, I think, to a significant level of support and resistance, and we bounced. This is weird. This is a weird looking chart too. What's going on? What is going on with Apple? Everything's weird, you guys. Honestly, everything is super weird. Definitely a channel through there. 1, 2, 1, 2. Is this 1, 2, 3, 4, and 5? Now we're in ABC for wave 4, wave 5 coming in. This would be completing. So maybe we have another small push in Apple too. I don't know. I keep saying that we're going to turn around, but it just does not seem to be happening. I think it's irrational. Microsoft too, just like right off the bat. It's like, hey, do you want to start connecting these things and drawing your channels? Look at that. 1, 2, 3. This could be 4. 1, 2, 3, 4, 5 coming in, starting to top out. We're possibly finding tops here across the market. QQQ failing to continue to push higher. 328 is a realistic target at this point in time, or 331 does not yet seem to be happening. If we get a new high above that recent high at 322, then yeah, we'll be looking for that higher target. But otherwise, it looks like we're starting to form some wedge here, some rising diagonal, which could easily be bearish, right? A, B, C, A, B, C. All right, wow, 1, 2, 3. This one does not before because it overlaps. Interesting. Again, There's just like these little price anomalies in here that really make me scratch my head and question whether or not we are topping or if we are going to continue higher. I don't know why we'd continue higher. One possible explanation would be that the dollar continues to drop. Now, until the dollar takes out 182 down here, I'm going to continue to expect a bounce, especially since we seem to be forming these converging trend lines in the diagonal heading lower. And I think we have these three-wave motions here epitomizing an ending diagonal triangle of this downtrend, which means the dollar could be ready to explode. And that would happen if the Federal Reserve came in and raised rates like a ton. Like, that could certainly happen. I would not doubt it, not in the least. So far, though, this downtrend's been extending longer than I thought. I had supposed we found the end of wave 5, but we hadn't. We actually came down and reached this 161.8% target from this initial impulse heading lower back here. So there you go. Way back here when I drew this thing like forever ago. Geez, that was true, and it took us a long time to get here, but we did get here. Now, whether or not we continue to move lower has yet to be seen, so I'm not counting on it, but if we do, then we're going to have to consider that the dollar is about to make a giant spill downward, possibly all the way down to like 91 or something like that. Did I draw that? I did, didn't I? Let's see. I think it was this one, maybe? Yes, it's this one. And so I'm just going to shrink the chart until we find it. Oof, 92. Yeah, if the dollar keeps dropping, we're going to get a huge drop incoming, but there's still an opportunity to bounce here. And I think that's going to be the case. Look at GLD, for example, which is moving very high. Jeez, it's just crazy. I was saying we might be in a half staff formation, so be wary of that. There could be a horizontal triangle through here, which implies that the first move from 168 to 186, we'll call it an even $20 for the sake of it, could be the first half of a move higher, which would push us up into like seriously $200, $205 for GLD, which would be a massive rally. And that's exciting. SLV did something similar, which I also forecasted, where we reached the $23.46 target, which I put down from forever ago. Like, seriously, forever ago. This initial impulse from back here from March 9th through March 15th, I put that there and I said, we'll see if we get up here. I am expecting $24. And yeah, we reached that. Yep, we did. 23.46, coming up, finding a high 23.81. Close enough. Bullish confirmation there coming in towards 21.52 was a great call. I took profits pretty early, honestly, because I've been expecting the dollar to bounce, but this thing is just cruising higher, just absolutely flying. Absolutely flying. This is telling me that there's been a flight to safety begun. Dollar strength is waning, and that is obviously, of course, also supporting a rally in SPY, making a new high above 412 is significant, and we do need to pay attention to it, although my bias remains bearish. I still think that we're going to head lower. This could keep going higher, and that is annoying for me. Until we break the last ultimate local high, though, towards 418, we can still be bearish. We can still be bearish. At this point, I've been trading SPXU. I was actually stopped out of SPXU today because guess what? The price dropped, which is totally fine. I don't have a problem setting stop limit orders like all day. I'll set stop limit orders all day. Honestly, it's not a big deal. I would rather just get stopped out and re-enter lower or wait for the confirmation breakout than be early and hold red. I don't want to do it with everything. It's not a big deal. Really, it's not. Dollar strength here, I think, is the biggest thing to be watching. We'll go look at the 10-year Treasury yields. They seem to be recovering a little bit today after spilling downward over the last week. So this could mean that bonds are starting to be sold, driving up their yields, which would be a risk on play. Yes, when bonds are sold, their premiums drop, so the rates rise. That would also indicate that investors are leaving treasuries, moving to equities, and that's maybe why we're seeing this big rally. I think it's a bad idea. Personally, I don't know where people are getting the idea that we're going to be moving into a new bull market. Well, I do get it, right? But also I think that it's just irrational. I think we're in wave B of a big move down, and this is what wave B looks like. It's narrow, it's sharp, it's overenthusiastic. At any rate, so that's kind of where I'm looking, and what I want to do next is look at IAU, talk about IAU really quickly. This is another gold trust ETF. What I like about IAU over GLD is the price at $38 a share. 100 shares go for $3,800, which is a lot cheaper than 100 shares of GLD, which at like, what was GLD at today? I can't remember. It just keeps going up, so I can't lose track of where we're at. 198. So you need $189,000 to buy 100 shares of GLD. So IAU is going to be a much more attractive equity for me to sell puts against. Selling puts. Do you know what a put is? A put's a contract to sell shares. Okay. If you buy a contract to sell shares, that gives you the right to sell shares per the contract terms, which will be the date and the strike, which is the price of the contract. So, for instance, I want to sell puts because I want to enter IAU and I'm bullish. So when I sell a put contract, somebody else is buying the right to sell me shares. Remember, it puts a contract to sell shares. So if they want that, they're going to be selling me shares if I'm selling them the contract. Does that make sense? I hope you follow. At any rate, so for example, the $38 strike is going to be a significant level of support and resistance. If I want to enter into IAU, this could be a great way to do it. Instead of buying long here and watching my investment turn red as we turn downward, I could sell a put and actualize a premium as that contract is purchased by somebody else. And then if the price does come below there, then I enter at a lower strike than if I had bought high, and I have some cash that will hedge that dip in price, the difference between whatever the market value is and what the contract of the strike is. And there's a couple different ways that I could balance that risk, but I'm generally pretty bullish, so I'd probably put on some sort of like bullish diagonal spread, something weird, doesn't make any sense. But let's go to the options chain and have a look. So contracts, they depreciate over time. Generally, if they're out of the money, depreciate over time. If they're in the money, they can appreciate over time, right? So it cuts both ways. It's very complicated. It's the most complicated thing you can think of. We've got delta, gamma, theta, and vega, and you also have the price of the underlying asset, which is also something that you have to consider. Anyway, so let's say per se I sell a contract for the 17th of January of 25. Wow, that's 645 days out. That's a long time. I don't want to sell a contract that far out because that will keep my cash to cover the cost of buying the shares locked up for 645 days. I don't want that. So I'll probably be looking at a closer strike, probably 36 days. That sounds good. So, that expiration day, what is that, 19th of May? $38. If I sell that contract, I get $35, 35 cents per share, 100 shares, $35. And all I got to do is wait until the 19th of May. And if the price of IAU remains above the strike of the contract at $38, then the contract expires worthless. I don't have to buy any shares from the purchaser of my contract, and I just get to sit happy on that $35 I collected from the premium. And that can be really nice. That can be a good way to do it. So at $3,800 to receive $35 back, yeah, it's not a lot. It's like 1%, but honestly, it's a great way to enter a position or just make money if you have cash sitting on the sidelines. It's not the most ideal way. I would really want to go out a little further probably to get a better premium. So yeah, I get $80 if I bump out the expiration date to the 21st of July. But what happens if price begins to rise? Well, if I pocket $80, I can go over here to the call side and buy a call too. You can see the calls are actually worth more. Interesting. And that's because the price is going up. So go figure. A way to combat this is, wow, look at this. It's $80 for a $39 call. I could sell this put and then use the premium just to buy that call and totally make it a wash. That'd be funny. Something you can do though is you can come to a shorter term expiration and you could buy one of these, or you could go further out of the money, right? So I could sell a contract here for 80 and then like buy at 60 here. And so if the price makes a big move up to $42, then I'm catching the upside, right? This contract will appreciate as it runs into the money. That's to say that the price of the asset reaches that strike or almost reaches that strike, and I'll just be I'll have to be using most of the cash from the sold put to do that, right? So if I sell a put for 80 and I buy a call for 60, I net 20 in cash, and that's kind of like where I'm at. This because this $42 contract might expire worthless as well. So if the price stays above 38 but below 42, then I still have $20. If the price moves below $38, then I've got $20 to hedge against the downward trend, but that's not very much. So $20 over 100 shares is only 20 cents. So I would only be hedged down to $37.80. So again, you gotta be careful here because you don't want to get caught outside of your risk tolerance. So I don't know what I want to do here. These premiums on the puts, they aren't nearly as good as the calls. Like, I wish I could be selling covered calls instead of puts. And so that might be a better strategy to enter into 100 shares long at whatever we're at now. What are we at? $38.70. So $3,870. Get me 100 shares, and then I can sell a call against them, which would be I'd want to choose a strike that's outside of the money. So if I sell a call here for the 21st of July at $1 a share, that's $100, $40 at the $40 strike. So if I just hold on to those shares, then hey, if the price comes down, I'm making money, right? But at the same time, I want to enter into a position and not necessarily just hedge along. So I got some things to think about here. I don't really like the bid-ask spread here, and the difference between the puts and the calls would make it tricky, but selling contracts is a great way to passively make money on cash that you're just otherwise sitting on, right? Like, I can make $10 selling an April 23rd or an April 21st call, but that's not a lot of money for $3,000, almost $4,000 that you're going to be coughing up to cover that put. You would want to make more than $10, right? But I'll be looking into this, try to figure it out. You can just hear my thoughts here about how I might want to use an options contract. I could, of course, sell naked options, but I'm not on a margin account. I'm on a cash account, so I can't do that. That means I either have to have the shares or the cash to fulfill the contract that I buy or sell. Nonetheless, I am looking for an entry here. I'm really hoping the dollar does bounce, because if it does, the decline could be pretty sweet. I'm bullish on gold. I'm bullish on gold, but also remember, things go both ways. Okay, they go up and down. So there's an uptrend through here. I'm just going to redraw it as a channel, actually. And, all logic would say we might have waves 1, 2, 3, 4. Can this be wave 4? Remember, wave 4 can't overlap wave 1. So I'm just going to take the top of wave 1 here. Yeah, no overlap. This could be wave 5, right? 1, 2, 1, 2, 3, 4, 5. Yeah, so this is weird. We're probably got some sort of diagonal moving through here. So I really do think we are finding a local high here in the metals. And that includes an SLV as well, although it does appear to be just like melting up. Implied volatility is not following. Interesting, right? Implied volatility is actually heading down through this uptrend, which is kind of a red flag for me. It really is. So overall, I'm thinking that the dollar is probably going to bounce. I might start selling contracts here to try to enter into a position and then use that cash to balance my risk. And the meme stock's just grinding sideways. SPY continues to just be totally irrational. If it gets above 418, then we have to flip bullish, basically. Until then, though, we could just be in some sort of corrective retracement. Implied volatility was not rising today, at least not on the hourly time frame, as the price pushed higher. The RSI reaching to overbought is this is actually not bearish. It's totally fine. Like, it could really push higher, which is very frustrating, honestly. I don't see it. I'm still thinking that I need to stick with my original analysis here, which is that we're going to top out. But if we don't top out, seriously, this could possibly be waves 1, 2, 3, 4, and 5. But wave 5 would only be as tall as wave 1 generally, so 386 to 398, so maybe $12 plus. And we'd be starting at the bottom of the 4 wave, which would be at 406. So we'd be looking for like 418 or something like that. What is this? Oh, wow. That's the exact price level I have written here as a high. So, okay. We could get up to 418 and complete a 5-wave form here. But then we'd have to be looking at as wave A or wave C. And here, I don't know which it would be. It could be a C wave. It could be a C wave where we have this weird irregular flat. Okay, so yeah, everything is just so weird right now. I don't even know what to do with it. It's like, oh, man. At least I'm not losing money. My SPXU position was stopped out today, which is totally fine. I'm playing it very safe, very, very safe. Again, I want to get the best entry I can get. And we didn't get a new low yet. So as long as we stay above 1288, hey, guess what? All this analysis I've been pumping out, it's still very, very, very valid. This is just taking a lot longer than I thought it would. Whoa, surprise there. Yeah, that's no surprise. Especially if you're a long time follower of the channel or my wife, everything takes much longer than I anticipated to. So let's take a look at Playboy as well. because Playboy has been dropping lately. We almost came down to that 161.8% target at $1.58. We bounced from there, and we're kind of looking like we're posing a reversal now. Thank goodness. Finally, I've been waiting here for a bit. I think what I want to do also is maybe draw a downtrend through there. Price is right up against it. Maybe we form a longer pattern here and some sort of falling wedge. Finding support at 170 would be nice. I wouldn't want to go below there again. I am holding a bunch of shares, 501 shares, at a cost basis of $1.79. Currently, we're sitting at 176, so I'm not doing too bad at all. And if we get a big rally here, we could see a push all the way to 245. Even though this is no longer really the valid target, I would have to recalculate that. It is an important level of significant support and resistance, though, so gonna keep an open mind about it. Maybe I can even start trying to figure out if we have some other chart pattern playing through here. It could be some sort of like descending broadening wedge. A, B, C, D. This could be E. But of course, we wouldn't be reaching that third touch point here. So yes, many things to consider here. Maybe it's a right angle descending broadening formation. Something like that. That looks good, right? A, B, C. This could be a partial decline. This could also be wave 4. I think bullish continuation comes towards that 187. If we can get below this valley, that would invalidate a motive wave heading lower, and that would make this push down corrective, meaning that the wave going the other direction would be motive, which would be going higher, which would be a significant reversal. I like the way that sounds. At the hourly time frame, the MACD has finally crossed bullish again, and it looks like it's opening up, heading higher, which is good. Implied volatility hasn't really confirmed the move yet. It's looking pretty flat. It hasn't been going up, but as the price drops, and now we see the price, see implied volatility heave here as price finds a low, and it drops in the uptrend. So this uptrend is still corrective. It's not motive yet. Volume in general seems to be a little higher down here, and I'm going to say those are probably buyers. The RSI coming deeply out of oversold, heading higher, but again, not reaching overbought yet. So just a buy and hold situation for me. That's all I'm doing, just buy and hold. There's so many lines on this chart, but maybe we have A, B, C, D, E. We could find a lower low too. Jeez, I can see the charts doing everything all the time. Anyway, this is getting way too long. I'm out of here. Happy trading.